We're here in Monte Carlo for the Rendez-Vous de Septembre. For AM Best TV, I'm Richard Banks. And joining us now for our cyber panel, we've got John Lokes, VP Analytics at Cybercube. We've got Erica Davis, Global Co-Head of Cyber at Guy Carpenter. And we've got Daryl Pidcock, Head of Cyber at Perils. Welcome. So, John, we've heard in our briefing on Sunday, cyber described as an insurance success story. What have recent events told us about cyber insurance?
Yeah, I think cyber absolutely has been a success story for insurance. The growth has been considerable from where we were, say, a decade ago when we were thinking about large-scale data breaches. It offers a wide array of coverages. Recent events, and I think in that regard, let's talk about CrowdStrike and maybe the Change Healthcare event as examples. One of the things that I think is really interesting about those events is it's going to be an important test of contingent BI coverage or system failure coverage for the non-malicious side of things. And I think it's important for a couple of reasons. It's clearly one of the reasons why companies purchase, and from concerns due to what we might call single point of failure technologies that can cause meaningful aggregation and dependence in terms of how interlinked technologies are. But whereas we've seen a lot of ransomware events over the last 5+ years, and we've been able to learn a lot from those events and how carriers can respond, we haven't really had meaningful tests at scale of the contingent coverages. And so in that regard, I think the CrowdStrike event in particular is going to be interesting to see. It's not necessarily hard to do the basic math of how contingent BI might be calculated, but that doesn't mean it's right. What passes forensic accounting thresholds, what level of materiality is needed for those claims to stick. And that's important, I think. Systemic risk is something we're all grappling with. It's one of the reasons that we exist as a company at Cybercube. And so how those claims get handled, I think, is a really important test and something that we can learn from. So some of these kind of low-grade systemic events, I think, give us opportunities to learn and better calibrate our understanding of the risk going forward.
I think, too, if I can, CrowdStrike is a good example of the market responding and behaving exactly as it should. I think there was discussion around the delta between the economic loss versus the insurable loss, and that triggered some questions around the relevancy of the product and whether it was really meeting buyer needs. But if you sort of dig a bit deeper into that, you'll find that there were instances of those affected who either didn't purchase the product or perhaps were underinsured. Some of the economic calculations included losses to the non-cyber line of business. So there was, in fact, some rationale behind that, why there was some difference. And I definitely agree with John's point that you can take lessons learned away from some of these sort of mini events that aren't hitting notable loss quantums, but still providing valuable lessons to us as an industry. Yeah. And one of them that I might take away from that is that I don't think as a market we were assessing events at scale with non-malicious intent. There had always been a huge focus on malicious intent, creating these sort of mass ripple effects and certainly stressing some of those contingent business interruption coverages. But this is an opportunity for us to sort of redefine the way we think about the origins of those events.
Yeah, I think I also agree with the fellow panelists here. And I think from our point of view as we reporting agents, looking, I guess, at more systemic loss, in the last 2 to 3 years, very much a focus has been on malicious attacks. So from availability of data, and there is a lack of historical event data, and then also flowing through to the modeling as well. So I think it is an opportunity, at the moment that the industry actually sits back and looks at the data, looks at the modeling, better understanding of the risk in terms of more accidental events. And it's not a big one, so it's a one that brings attention, but it's not hurting the industry too much at this point. Yeah.
Brilliant, thank you. So Erica, I was interested to hear you talk about client need there. We're here at a reinsurance conference where the clients are the insurance companies. To what degree are reinsurers providing the solutions that insurers need in the cyberspace?
Yeah, so there's been a ton of progress that's been made over the last 24 months, and historically you have a market that relied very heavily on quota share and aggregate stop loss. What these events have done, recent events, have sort of built that event set as we're talking about, and it gives us a sort of sneak peek, a preview, right, to how some of the newer structures available in the market, things like currents and event wordings, are able to respond to these types of events. And so, over the last 18 months or so, there's probably been 4 to 6 that we can point to as an opportunity to back test the efficacy of some of those newer event wordings that are available in the market, make sure that they're aligned and refined based on our clients' needs, and really expand the structural sort of suitability and options available to clients. One of the benefits of doing that is that then you're able to attract new sources of capital, which I know my panelists have a lot of interest in as well. But I think it's important that we source fresh capital for the market, that we expand the number of structures that are available, and that we are able to draw insights from each of these sort of smaller scale catastrophic events, these sort of cyber kitty cats, in order to extract better solutions for our clients.
Yeah, and I totally agree. And I think, just building a bit on that, we engage a lot with certainly the major reinsurers who are supporting, from the cyber sort of space. And, a lot of that is still driven by quota share. So the information, it's still dependent on sort of border rows. So there is limited data. So I think reinsurers are building up resources and investing more. But it still is a need to how to get more granular data to better understand the risk. Because that will really, be a critical piece of that sustainable capacity continue to flow through to the industry going forward.
I would just add that it's really exciting going into this renewal season that insurance-linked securities are now a clear lever to consider in terms of the overall, way that insurers source capacity. So I think it'll be interesting to see how that goes, and kind of echoing what Erica said. The development of more event-based triggers is, I think, a really important development of that, and so that's an encouraging thing as we think about what's available to insurers now as they look to manage their overall view of risk and kind of the relevant kind of mix of seeding profit, managing volatility, all that kind of thing.
So it's interesting to talk about the development of the cyber market. Daryl, as cyber becomes more mature, what sort of tools does the market need?
Yeah, I mean, my co-panelists may have specific things, but I think a general comment I would say definitely in the modelling space is one thing. I mean, again, we just touched on sort of the learnings that will come out of CrowdStrike in terms of the more accidental events. I think there are tools there, but probably more attention needs to be sort of there. I think there is also we see some early examples of again ways to manage the capacity from the primary through to the retrocession market. We've seen some ILS and ILWs already. It's early stage, and I think there's really quite a range of these tools. Also, again, coming back to the point about how do you ensure that there's this flow of capacity over time, because there will be bigger events which will shape the industry, and as we know, that's when the really critical need is, given especially the growth of cyber. So there's a lot of area work to be done still in the space.
So we're here in Monte Carlo. The global reinsurance industry has gathered here. To what degree is cyber a global product now? To what degree do demand and supply differ around the world?
I mean, my perspective, it's very much a global. From our point of view, we've started, 12 months ago reporting the US loss index, which is with Cyber AccuView as our partner in the US. Whilst the US, of course, is still driving the cyber market, the largest market, I mean, cyber is global. And I think that, we're increasingly also engaging with the industry now is how do you, from a reporting of these systemic events, to capture reliable global numbers, and what are the really key markets. And flowing into that is obviously it's not like NatCat where you have particular events in certain territories. Here, cyber is across industries and different sectors, and how do you capture and report that? So again, I think that's a real critical piece going forward in the next few years.
I would say it's becoming global. It's interesting to look at it both from the perspective of where the threat is or who's targeted, as well as what the laws imply in different jurisdictions. U.S. organizations tend to be the most targeted. most cyber activities financially motivated, and so they're looking for money. That's changing a bit. What's also been interesting to follow is how privacy law is developing in different places. We've kind of been in maybe the second major wave of privacy law with the SEC disclosures and things of that nature. India recently passed a law which is increasing the threshold for legislation and disclosure, I guess I would say. There's some other Asian countries that are potentially following suit in the near term, and so particularly more on maybe the breach side of the business. It's interesting with an intangible thing, what really constitutes harm. I think ransomware really leveled the playing field, so to speak, in the sense that, many organizations can be disrupted and affected. In terms of some of the other things that are maybe less clear, tangible impacts to the organization, I think that's kind of where maybe the legislative changes will eventually stimulate awareness and then demand.
Is that reflected in the reinsurance market?
I think so. So we calculate the global market size as being 15 billion gross written premium. Roughly 9 billion of that is U.S. The remaining is rest of world, and rest of world growth has significantly outpaced U.S. market growth the last several years. And diversification is really important. I think it's highly valued by both the insurers and the reinsurers. And John pointed to some of the sort of regulatory differences in those regions. So that's one way that our, cyber writers are managing their overall exposure. I think when I take a step back, it's not just about sort of that regional diversification, sort of steering towards recent events. I think one of the sort of key underwriting strategies our clients are focusing on is also like industry class diversification. And so if you look at CrowdStrike, that seemed to impact more of, mid, large, and supersized companies. That's very different than what we saw in CDK, which had more portfolio-specific impacts on small business writers. And then we can shift a little bit more on industry vertical to something like Change Healthcare, which had much more healthcare-specific sort of ripple effects. And so when you look at revenue segmentation and regional diversification, and then that industry class sort of diversification, those really showcase the value of having different parts of the portfolio represented, and the value that's found within that.
Thank you all very much indeed for joining us. For AM Best TV, I'm Richard Banks.